The Labor Department says unemployment fell to 7.4% in July as 162,000 Americans found jobs, enough to help drop the unemployment rate to a 4.5-year low. The White House welcomed the report but expressed concern that economic growth is still sluggish.
I think the fact that the unemployment rate fell from 7.6% to 7.4%, the lowest since December 2008, is good news. It's a sign that we're moving in the right direction, but we have a lot more work to do.
While the dip in the unemployment rate is encouraging, the accompanying data show that weak economic growth is giving businesses pause when it comes to hiring.
Drop in the unemployment rate comes with the labor force participation rate going down again. So once again, we're having lower unemployment because people are basically leaving the economy.
Reaction to the report on Wall Street was slightly negative. Stocks retreated at the open. The Federal Reserve is paying close attention to the July report and will factor it in its decision on whether to taper its bond purchases at its September meeting.
Obviously, the Fed has said it looks at the unemployment rate, but it puts it in context. The Fed is not going to be as impressed by this decline in the rate of unemployment because it's coming with a drop in the participation rate. That's going to put the Fed back on its heels.
The report follows Wednesday's news that the economy grew at an annual rate of just 1.7% in the second quarter. While that was an improvement over the previous 2 quarters, it's still far too weak to rapidly reduce unemployment. John Belmont, Associated Press.